Good evening, traders. Welcome to this ACY Securities webinar. My name is Nathan Bray. I'm your host, so I'm one of the senior account managers and trainers here at ACY Securities. So I've been trading the markets. Not that my trading matters to you, no doubt, but I have been using various strategies throughout my sort of 15 plus year, without giving away my age, experience in trading CFDs and trading Forex specifically, as well as indices and gold. So this evening, what I want to run through are 5 trading strategies. So these are strategies that over the years I've got from full-time traders. Okay, they've been developed not just by myself, but by other traders out there, as well as an heavy influence from our own senior market strategist, Duncan Cooper. Okay, and you can watch his webinars during the week around early morning UK, Europe time, and get full analysis and education there. So the 5 strategies I'm going to show you this evening, by any stretch, are really to get an idea of the different approaches you can take to the market. But I guess more importantly, the benefits of having a strategy, okay, in the market that you can then reflect on over time, because we don't know what the market has in store for us. We don't have a crystal ball. We can't predict the future. Okay, so what I would say to you is let's go through 5 different approaches tonight. Remember, I won't be able to go into a great deal of explanation. However, I am making a video a week approximately, going into more detail on the strategies I'm going to show you. So just before we get started, please have a look at your screen and you'll see there's a risk disclaimer in front of you. Keep in mind tonight, I will be answering, no doubt, lots of questions and showing you different strategies, but by any means, I'm not providing any personal advice. So we will be keeping it very general by nature, and of course discussing technical analysis and the markets in general, as well as trading strategies that you could apply to it. Okay, so now that you've had a read through that, let's go and I'll break down the 5 strategies and how we'll approach this over the next sort of 40-45 minutes. So first of all, we're going to look at why trading with a plan is so important, and then what should a trading strategy actually consist of. I feel like if we get those 2 elements out of the way, we can then start to delve into different trading strategies. So first of all, we're going to look at one called the dynamic intraday support resistance strategy, followed by trading inside the range. Now, both of these are ideal for intraday traders or swing traders, people looking to stay in trades perhaps for a few hours up to a few days. Then we're going to take a look at the time poor trend trader. So that, as the name suggests, can find you triggers throughout a day. Okay. However, how long you choose to stay in this trade is up to the individual, but I will give you some guidelines on how it can make it very simple for the time poor trader. Then we'll have a look at strictly an intraday day trading approach, which is called the Simple FIB Trader. And then finally, for people looking to not be glued to their screen and look at charts, regularly throughout the day, these are levels that key level trader where you can identify them for multiple reasons and confirmations, and then set a strategy that you could be in for days, weeks, or even months. Okay, so these are the 5 that we're going to go through right now. But to start off with, why is it so important to even have a trading strategy, or in this case, a trading plan? So I'll just run through a few points here to consider. Identifying your goals, that really is what we're all here to do. Okay, so we need to know why we're trading. We want to identify what analysis you might need in order to achieve those goals. Then you can break it down and say, well, you want to be able to have an approach where you can manage your emotions. For example, when you're on a losing streak, okay? Know if you're headed in the right direction. That's what a trading plan is going to allow you to do. You're going to have times where the markets can be very volatile, very uncertain, but then you can have times where the markets seem to be moving overall in a particular direction. You want to be able to trade then with less emotion and less stress. Okay, with a plan, you can make objective decisions at all times. You want to be able to develop your processes. So one of the things I find, a bit like I guess a professional sports person, or anything you do, like on a daily basis, before you go on the field, before you play your round of golf, whatever it is you're doing, there might be things that you do. You do a warm up, you check the weather, you check the course, or you'll see sports people stretching. They'll do a warm up. They'll have things they listen to. They then do their big. If it's a team sport, they get together and someone will make a speech, and everyone will connect in that method. That's the way I see processes. And I think when it comes to trading, the way you sit down, do you have a coffee? What do you check something before you get an idea of what's happening in the market? Is there a way that you have a process to approach your trading every day? And then when you're ready and you've completed those things, you can say, okay, I'm ready to do my analysis, or I'm ready to implement the trading strategy that I want to do. And by doing that, you might be able to find certain biases that you're going to have for the day. Okay, so when you look at the big picture, get ready for your trading and then get straight into it. And I guess you're also wanting to determine how much money you're putting at risk. That is what a trading plan is really going to do for you. Okay, so that you know what is my situation, so you can have some kind of control, and therefore the uncertainty and the emotion comes out of it. And of course, you have a trading plan so that you can develop a potential profitable strategy. Okay, so they're the reasons we've got this trading plan. And I know you can go on to, ChatGPT especially, and find everything on the internet about what should a trading plan consist of, and you'll get all kinds of answers back. I've done it myself, right? I've had a look, and sometimes you get too much information or not enough specific information. So I'm going to give you the three things that I believe a trading plan should consist of. Number one, the setup. What is my entry criteria? Okay, when the entry criteria is met, it triggers me into a trade. Then what do I do once I'm in the trade? How am I going to manage the trade? So you need to have preset decisions to say, if this happens, I'm going to do this. If this happens, you know what I mean? You need to manage that trade. For example, if your trade works really well in a short period of time, you may decide, I will immediately take a larger amount of profit in a short period of time. You might have a rule. You may say, once the trade moves in my direction a certain amount, I'm getting risk out of my trade. Okay. Or you may say, I'm going to take partial profits when this is achieved. So that's how you're managing your trade once you're in. And then the final thing, of course, is your exit. So you need to decide when to close your trade. Once your exit strategy is met, could be one reason, but then you may also, as I mentioned, have, for example, a take profit target is met, or before a major data event is due, something like that. You'll have your processes for trigger to entry, manage the trade, and then you'll exit. So it's pretty systematic and it's pretty simple. Sometimes I'll speak to traders where they'll say, oh, they spend a lot of time looking for setups, but then once they're in, they may say things like, oh, I felt like this was happening, or I felt like, and I would always say, you could sing that song, feelings, nothing more than feelings, right? So that's why I feel that it's important, excuse the pun, to have a strategy and have a plan and have that set. Okay, so I'm going to move this PowerPoint screen away just for a moment and show you some charts here. Okay, so this first strategy, this is the way the strategy looks on your chart. So there's a whole bunch of things. This is that first strategy that I mentioned. All right, so an intraday support resistance strategy. So what we do is we use it on a 15-minute chart. You can use it on a 5-minute chart, okay? But what we're looking for is a few elements. So I'm going to squash this chart in. This is a chart of the Euro franc 15 minutes. So I'll squash this chart in so you can see all the lines on the page. So what you've got are these dynamic, because it's called the dynamic intraday support resistance strategy. You'll see these lines that bend. So I'm just going to go off the top one here, this red one. These are called pivots. They're intraday and dynamic. So this line at the start of each day, which is right around the Tokyo Open, okay, they bend for a new day. So therefore you can see down the bottom, it alerts you too. So what I want on my screen when I'm intraday trading is things that are really important to me, and I want everything else gone in effect. If something happens, I want to be alerted to it. And I'll give you an example in a moment. So I want to know when markets are going to open. So Tokyo opened down the bottom, it tells me. Hours later, and you can see during the Asian session here, it was pretty quiet. Hours later, Frankfurt and London open, and suddenly this sideways Euro franc starts to break to the upside, okay, around a market open. So this period here is important. And then, of course, we get the New York Open where we can get some changes occur. And then it comes all the way back to start a new day at Tokyo. Okay, so these market opens to me are really important, especially if you're using intraday trades. Now, as far as the pivots go, they're deemed as basically intraday support and resistance levels. So you'll see that you've got red ones are sort of deemed as your intraday resistance levels. Then you've got regular pivots. And then in the middle, you've got this dotted line. That's your central pivot, or that's deemed as like the moving average for this particular day that's set, okay, as the dynamic pivots do. To give you a level, I like a flat bench to see the level a bit clearer, because moving average lines can sort of, be a bit squiggly. So that's what I like about it, that central pivot. And then down the bottom, you've got your green intraday support and resistance pivots. So support pivots. So green for support, red for resistance, and everything else in the middle. And I think these tools are very useful. The other thing you'll find on the chart, I'll just put it back to normal now because I had it all squashed in. You'll notice on this chart so far today, there's this other thing called today's projected low. See the blue line here, and today's projected high. And you'll see as today started, right around the Tokyo market, price basically touched this today's projected high, and then all day so far it's failed all the way down, and look what happens, it's touched today's projected low. All right, so that's why we're using them more as a guide than to say, like, I'm using it as a guide in that two things. You've got this red dotted line that we've put on there for you, which is called the figure. So it's like a whole number. So exactly 95. And then 100 pips higher, you've got 96. So what I'm noticing today is today's projected low is also very close to a whole psychological number, okay? So you'll see price so far has fallen from today's projected high all the way down to today's projected low, and we've had a bounce here. And we've also had a green, we're down into the green zone for the day, which could be potential support. So what you're using these pivots for is a few different things. You're using them as guides to say, where is targets for today? Like, do I really want to sell into today's projected low? If I saw this going down, I thought I'll sell. I can look at today's projected low, the fact that there's a psychological level there, and say, and a green, I'm starting in the green pivots. Do I really want to sell into that? Okay. Or do I want to wait for some kind of rally and look for a sell, etc.? Or if I'm in a sell, do I want to exit this trade? Now, is that my target? So the next thing I'm going to do is show you, I guess, how to look for really simple setups. Okay, so we'll start with a buy. There's three things you got to know. You've got to, for the setup in this intraday strategy, you need to see that a pivot is being respected. Number two, that your trend line is broken. And number three, that your MACD, which you'll see down the bottom here for a buy, has crossed up. Okay, so let me give you an example and we'll sort of take this back a little bit. So if we're looking at price, you'll see down here this central pivot, which I talked about. It's almost like the moving average. If price is going up and then we get a sell-off, it comes all the way down to this central pivot. Then it rallies a bit and it comes down for a retest. So I could look at this. This time price went below it. Obviously, that's more towards a news event. But here I start to see the candles get down, but they can't get below the moving average. Right? You see, it's almost like these 15-minute tweezer type candles here, these hammers. Okay, so with these long, it can't get below it. So that's where I'd look at it and say it's respecting that pivot. So then once I see that occur, I could simply draw in a trend line across the swing points. Again, this is all taught in the webinar that explains this setup in more details, like how do you draw trend lines, how do you identify swing points, etc. So when you look at it just for your own interest, you can see, okay, price is coming down, but this number one is this pivot is being respected. And now we've got the trend line break here, yeah? So this trend line's now broken. And then I look down the bottom for confirmation and I can see that my MACD, the blue's crossed above the red. 1, 2, 3. So what that's telling me is a simple way on a 15-minute chart to identify a change of direction. So just to explain it again, the pivot's being respected. It's not being respected here. It closes below it and then it trades underneath it. But the next time it comes down, it actually respects it. Okay. And then even if you miss this setup, price comes back down as a retest and definitely respects it here. Okay. So if you missed it, you could almost go, okay, well, I'll draw in from this swing point to say this swing point. It's respecting this level again. Now I'm getting a break here. Okay, so even if you see a trade, remember these levels can be respected, and that's the average for the day. So if, let's say, you're looking back and you're saying this particular pair is in a let's say a 4-hourly uptrend, I can go to my 15-minute and look for setups for the pivots for buys. You could say here, I'll put a stop below the most recent low point, which might be here, risking about 6 to 8 pips. And you'll see it goes all the way up about from the entry about 22, 23 pips. So you're looking at close to sort of 2.5 to 1 risk reward. And you'll notice it also goes all the way up to a red pivot. So this is how you're using these pivots to look for trading opportunities, for example, on the buy side. Now, if we're looking for opportunities on the sell side, we'll just move across intraday. And I can see it. I know you've got two things happening up here. You've got the fact that at the start of a new day when they redraw, you'll notice price goes up and respects this pivot. And it also happens to coincide with today's projected high. So if you're in a position, you could, again, draw a trend line in, say, from this particular bottom through the next swing point. And you see that day, okay, it's failing at today's projected high already. And it also coincides with a pivot. And now I've got a trend line break. And I've got my MACD already crossed down. Now, remember, at the start of the day, they're going to redraw. So they can be a bit tricky, but I'm just using it as an example. Okay, so you'll see from here, if I was to put a stop above the previous high, 7-8 pips, so far today it's gotten down to today's projected low, down about 28 pips. Okay, so again, sort of, looking at intraday 2 to 3 risk reward strategies. If we go back to the buy side as well, so if you miss this trade, these two setups here, you'll notice the next day, because it's in an uptrend, right, price can pull back to almost the moving average. See down here, it mightn't have quite tagged it, but again, you could draw in your trend line. Okay, it's now respecting this moving average. It almost gets down and touches it, and then you get a trend line break, okay, and you get your MACD cross up. So what we're doing there is saying, okay, now it went as high initially of 22, 23 pips. You could have left it on, and it's gone up 27, and you would have only been risking, say, 5, 6 pips, even if you gave a few pips room below. So just to give you this concept, this allows you to look for setup. So I could literally go across the market right now and look for anything where a pivot's been respected. So you'll see this pivot here. Yesterday, price went down, couldn't get below it, trendline break, MACD cross, we get these moves up right around just before we get a market open as well. Okay, so if I look at, say, let's look at, say, euro dollar. You'll see what I'm talking about. It's like the market's kind of a bit sideways all morning, Asian session. Frankfurt, London open, and boom, right? You get really significant moves. So that's just an example. I mean, we've seen the same thing today. Yes, it's a little bit more movement in the Asian session, but then all of a sudden you get a pretty distinct movement. So what we're saying is if you could look at a particular setup around a certain time each day. So you could literally draw in your trend lines with this strategy, see what ones are respecting, wait for a market open, and start to look for activity. Okay, so that would be the dynamic intraday support resistance strategy. And I've only got in front of me what's really important. So we're watching the euro dollar right now, and you can see price has come back up. Yes, it's heading down, but see how now it's respected this central pivot. So if I was to already have a trend line drawn in, let's say we're using this swing point, and this one didn't draw that perfectly, but you get the idea. We're now in a position where we've got a trend line break. Now all we're waiting for is for our MACD to cross down. Okay, so because the reality is this one candle might show us a change of direction, but by the end of this 15 minutes, like in 6 minutes time, it could completely reverse. So that's why we're using the MACD to smooth things out and give us a confirmation, okay, rather than just seeing a bit of a price move down and suddenly we're all like, okay, quick, I better get in. We're being a little bit more specific and saying, okay, I need 3 things to happen. Otherwise, you'll find, these are setting up. Some people go as far as saying, I want to see the candle close. So, it's 10:24 p.m. here in Sydney. I'm going to wait till 10:30. And if it's crossed down, and then I'll check my MACD, it's starting to turn, then I'll do it. So again, I would say you can choose how you want to use or manipulate the strategy, but you've got to be consistent about it. You can't change that. So in order to say, is it working? I mean, of course you can as a trader, but what I'm getting at is the strategy to be able to look back and say, okay, is this profitable, this approach? Okay, which does require you to be pretty accurate about what you're doing. Okay, now you might say, I don't have all these indicators or sets up on my screen. That's okay, because all of what you see here, your whole screen, a bit like mine, if I go pound, dollar, again, look at the pound dollar, it's all failing under this central pivot at the moment. New Zealand yen. Now here's one. Price has just rallied up to a red intraday resistance level, and I could have had a trend line kind of drawn in. So let's say we keep it really simple and go. So if we go across these bottoms here, even if you were using these swing points as a guide, yes, you could tighten it up and use this one, but I'm just being quite conservative. It respects the resistance pivot for the day. We get a trend line break. We have our MACD cross down, okay? That's going to give us an indication of a change of direction. However, and just to clarify that, when you're drawing these trend lines, which is taught in Duncan Cooper's webinar, if I was to use this swing point, obviously change that around a little bit, but I think you see what I mean. So I'm using the bottom of this candle because both are pretty close or higher, if that makes sense. So it's up to you to be able to identify your trend line. And then you could say it's respected here, trend line break, oh, my MACD's crossed down too. Okay, so all I'm doing is identifying changes of direction with confirmation using these intraday support resistance pivots. But that isn't to suggest that we know how far this change of direction is going to last for. Okay, so it's identifying them and then, of course, using it in conjunction with your intraday trading. Okay, and that is starting to fall back now. The other thing you can do too with this strategy is you can look for convergence and divergence on the 15-minute as well. Okay, so for example, and I may be going too far here, but it's certainly taught in Duncan Cooper's webinars. If I look at, say, this top and this top, right? Sorry, let's let me get rid of that. So this top point and this top point there, and I go down the bottom and I can see this was the area that crossed down here and crossed down here. But notice how this cross down is actually kind of higher than this one. So I'll just draw that line in. But on the chart, like this one is actually higher than this one. But if I go to the chart, price is actually higher. So this is where you can identify convergence and divergence as well. And see that, yeah, this move up may be running out of steam. And if we get a change of direction, respect the pivot, etc. So these things are a little bit more advanced, but again, they're taught in those webinars. Okay. Now, because I have to take you through 5, folks, let's just move along here. So you can see here all of these profiles are all available to you. They're free of charge. They're available and taught by you can have your own account manager, or you can have a trading mentor as well who can take you through in more detail in, say, a Zoom session, but more importantly, have your MetaTrader 4 with everything in there. So you can either use bits of them if you're creating your own strategy, or you can have them all there to go back to and keep an eye on. Okay, so the next one I'm going to show you is called the so this is your time poor trader, okay? And this is a really simple strategy here. So it's just you just use an hourly chart. You don't use anything else. And what you're looking for, it's a trend trader. So it's a really simple approach. Okay, so for people that are time poor trend trader, so what you're doing is looking at your longer term trend, which is down the bottom here, and that tells you your daily trend. And then above it is your hourly trend. So what we're looking to do is match your daily longer term trend and to have your hourly trend matching. And then if we get a breakout in the same direction, but when I look at these two, one's green, one's red, do not match, right? So they're not matching. So what I need to do is click through and find opportunities where these setups are occurring, okay? So if I go back, I'm just using this Aussie yen here. You'll notice over the last day, you'll see down the bottom, the hourly trend turned from red to green and the daily trend was green. So here we were looking for a buy, okay? So all we need to see for a buy is for price to go up and hit the green dot. So it's daily trend green, hourly trend greens matching, and then price to go out and hit the green dot. That's your strategy to enter. And you can see I put in a line there where you might have entered. That green dot, because what we're saying is the daily trend's up, the hourly momentum is matching. Because remember, you could have hourly charts that have a bit of a pullback if you're in a buy. And then if they match, and then you get a breakout in price in the same direction as the hourly daily trend matching, then that would trigger you into the trade. Very simple. So let me just take you back here and we'll see, because it's really important to see what it actually looks like. So right here, you'll see the hour before turned green. So the daily trend is green. The hourly trend was selling off, and then it turned green again. So we're trying to get in as the momentum kicks back in. And then we get this breakout here. And as soon as this breakout occurs, a red dot forms below. So that green dot will disappear and the red one will be there. So it's just green, green, green dot. Okay. And then this red dot is just below there is where you can put your stop. Real simple. It's a very simple strategy. Again, apologies if you're not totally getting it, but we have created videos to explain this. And of course, you can always go into the live webinars and ask the hosts any questions you've got as well, especially Duncan Cooper, because Duncan certainly was part of developing this a long time ago. More as a trading tool, but a great way to get started in the market. So you'll see here, price triggered, it moved up. Look, it moved up nearly 94 pips over the last little while, probably 24 hours or so. So you see, this is how it works, and price actually never got back below here. This is where traders could start to implement trailing stop losses. There's a bunch of different things you can do, but it's a very simple strategy. And the biggest advantage is I can go through the whole, say, 12 different currency pairs, commodities, and I can also look at, say, indices, etc., and see what's matching. So if I just go Aussie US dollar, not matching. Euro yen, not matching at the moment. Euro dollar, not matching at the moment. You sort of get what I mean? We're seeing, okay, so we're looking for a sell setup that set up earlier, a few hours ago, for a sell because they're matching. So what we need to see now is price come back up and reset for a sell trade. New Zealand yen, it's matching on the buy side, and you can see price went up and set up probably at the earlier this morning. Okay, and it's been moving up with different setups all along. So I won't spend too much time on this one, but this is an interesting strategy where you can go through, throw out all the ones that aren't matching, focus your attention. Let's say there's 3 or 4 for the day, and then come back every few hours or later on to see if it's set up. And it's a very simplistic approach. And maybe if you can do that strategy over and over again, it can put you in a position where you are following a very simple strategy. Okay, now let's move on. So I'm going to show you the Simple FIB Trader now. So let's just have a look at that one. For those of you who aren't familiar with the Fibonacci tool, so this is again is on a daily chart. Okay, so it does require people to have an understanding of using the FIB tool or the Fibonacci tool. And what we're doing is looking for pullbacks. So we're trading in line with a trend, and we're then waiting for pullbacks, because using Fibonacci as a buyer, the idea is you want a decent retracement so that you can enter a particular trade. So I haven't looked at anything as yet, but you can see here price has been moving up. So if we look down below, it tells us the direction of how we should be drawing our FIB tool, either from bottom to top or top to bottom, and it's based on this particular move down. Okay, so if we use this most recent move down, I could draw in my FIB tool from top to bottom because it's telling me it's red. And then it's a very simple strategy. If I get price rally back up to the 62, and it says it right there, level, or some people want to go deeper to the 79, it's up to you. But if it gets to the 62 retracement level, you can simply trigger in the trade. If it gets to that price, some people do it, and put in a pending order, and we'll say, right, and then they'll fill or kill it, or they'll say, right, they'll come back and see it didn't get there and then cancel it. But you could use that method as well. You could just put your stop above the previous high. So I'll do that for you. And then your exit is the 127 extension. Okay, so I'll draw that in for you too. And you'll see if it had have rallied a little bit further up to here, it would have triggered us in. And right now it's almost reached that one. Well, it has a few hours ago. Okay, so you're able to trade retracement levels in line with trend, or just reversal levels as well. So let's go in and have a look at a few different examples. Okay, so let's use this pound dollar as an example. So it's green, this green move here. So that means I need to draw my fib from bottom to top. And I want to see price get back to the 62, and it has. So that would just trigger you into this trade right now. Okay, so I would say, right, I've entered at that 62. It almost got down to the 79, but in this case, let's just say we triggered in. I'm going to put my stop, okay, above the start of the, below, sorry, the start of the move. So from where I started, that's where I put my stop. And the 127 extension up here is my target. So what it sort of does, and yes, this is an example of a setup kind of right now, because the trend is up. You can see, you look back and it's been putting in higher tops and bottoms, and we get this rally up and it's triggered us in now. So the stop's down here and we want a target up here. And that's how we're looking for pullbacks to trigger us in to follow trend. Okay, so if I use this most recent move higher that happened yesterday, we're saying the trend's up. So this move up, and sometimes you might have come to here, got a bit of a pullback, and then it took it, and you've got to move your fib tool, okay, once you get a change of direction. And you'll see it did come down and literally touch this 62 level, didn't it? Okay, on this one. And it then rallied all the way up and reached this 127 extension. Okay, so I'll get rid of the current one that's live, but you can see it here. So this is the move from bottom to top. Okay, I get a pullback to this 62. This would have triggered us into the trade right here. And then I'm targeting this 127. So in effect, I'm targeting 70 pips and I'm kind of risking 30, 29, like 30 pips. So it's sort of a really simple way of trading with the trend, but rather than breakouts, you're using the fib tool for retracements. Some people have a view that if you're trading with the trend, you want to buy the dip. Okay, you want to get a significant sort of dip level, and then that allows you then, because as a buyer, you want to buy at the cheapest possible price you can. So that's sort of one logic approach. And then if the trend's going to continue, it's going to put in a higher top. And that is why you use your 127 extension. It also gives you a 2-for-1 risk reward. So if you were to go through the market and draw in your fib and look for setups, then that's certainly an approach you can take. So I'll just keep going here to get an idea. So we've got New Zealand yen for a buy from this bottom to this top. And it pulled all the way back. In this case, it actually tagged the 79 fib level. but certainly reached the 60. And right now, look at it, it's at the 127. So it's a really simple approach. And now we could be looking to say, well, I missed out on that one, for example. So now I could set myself up. If it'll let me. Sorry, it's getting a bit cranky. FIB tool just does not want to go. Sorry, my screen's just a little bit jumpy. There we go. Happy day. So let's say you missed this move higher. Now we potentially could have another move higher. So let's set one up now that may set up later or may not. So we'll use this move higher. So we look at the color down the bottom. We know we've got to go bottom to top because this move is a positive one. And what I'm looking for now is a pullback to here. And you'll see it's 92.54. So one could say, I want to trade in line with this trend. On the hourly chart, if I'll put an order in now for 92.54, that will trigger you into the trade. And then you can also set your stop and say, well, down the bottom here, and then you can set your 127 extension as your target. So again, this is a strategy that is taught by our own Duncan Cooper, and webinars do explain it. And of course, you can speak to your own account manager as well, or you can book in a session with myself and we can do some trade reviews. So sometimes when you're trying different strategies, I would say to everyone too that the strategy, it's also got to suit you psychologically. If you don't like really short-term type strategies, etc., you're not executing them well, then, look for a different type of strategy there. All right, so let's move on. So now we're going to have a look at using price action. So this is where we're looking at what's happened in a range. So I'll just show you this one very quickly. So what we're using here is we're wanting to know whether or not price, you can see there's a few lines on here. I'll just go to a 4-hourly chart. So what we're wanting to do is look at the range that price is trading in. So you'll see these dotted red lines. You can come in and basically create, this is last week's low to last week's high. So we're able in effect to trade inside the range of the candle last week. Okay, so we're able to do this in multiple ways. Sometimes you get 4 hours up or an hour up or a move, but then you realize we're still kind of stuck inside the range of, say, last week, or you can go further and look at last month. So see how you've got last month's high here and last month's low here. So we're able to do a very similar thing where we're looking at trading inside the range of the week before, okay, or the month before. So it gives us this ability where if the trend is down, if we get a rally, so if I was to draw a fib tool across the whole candle, and notice how last week's high coincides with last month's low, right? You start to see these levels in the market and see this whole, say, month candle, price actually rallied back up to around the 79 level before it continued lower, okay? So what we're using price action for is identifying trading levels that can be used for swing traders or people that want to stay, just look for really basic setups in line with the price action direction. Okay, so that is what I would say to you there. So the last one I want to show you is for traders who are looking for longer term trading strategies where we're trading off key levels. So I'll give you an example. Right now, I'm looking at one. So I'm on a daily chart here of Aussie yen. And what I'm looking at is, yes, trend is definitely going up, but I'm now noticing if I go to a weekly chart and I go back to 98.43 back in 2022, price seems to fail up around this level. Okay. So even though the trend's up, do I really want to be selling into that? So, sorry, do I really want to be buying into that major weekly resistance level? Or do we go monthly and look right back and see how when currencies are deemed as mediums of exchange, then are there levels where it just becomes too expensive or too cheap? Okay. So that's why we're now looking at this as an example. And price has rallied up to here over the last few years, but then we get really substantial moves lower where it sells off. So if I go to a weekly chart, I'm up at this level. Do I really want to buy into it? But the second part is, could it provide another opportunity, another shorting opportunity right up at this high level for multiple reasons? Okay, those multiple reasons we'll go through at a later stage, but it's where we're looking for reversals, lower tops on, say, a 4-hourly, and different approaches. But it means we're looking at really significant levels in the market to be able to isolate trading opportunities. And one might put in, say, 100 pip stop and put in their target, say 200-300 pip target, and that's it. You don't have to sit there and watch these trades. But if you think about looking for opportunities, you mightn't get as many, obviously, as your intraday trades, but you certainly can trade off these levels. Sometimes I'll look at these levels as well and think, well, I could look for a longer term trade as well as a setup on the shorter term intraday as well. Okay. So they're all the aspects that we'll certainly go through. Now, folks, they're the 5 different strategies that I've taken you through tonight. I know we've only had a chance to cover them pretty quickly. So what I would say to you, though, is let's, as we come to the end here, the complete package that you've got access to. So it's available to all our traders at no cost to all our registered clients. So it's free to register. There's no obligation even to trade. What we're looking for are people that are willing to learn and put in that effort, okay? Because that time and effort is in effect your cost. Even if you're doing it in a demo account, okay, you're still putting in that time and effort. So you do get the customized trading configuration. So they'll be all set up for you on your MetaTrader 4. That will be followed by a dedicated account manager to guide you through or mentor you. Do trade reviews. You'll also get access to the 30-part trading course, beginner to advanced trading, and that will cover in detail everything I've shown you on all 5 strategies, plus a lot more, okay, as well. At the moment, there's a lot of interest in liquidity zones, using longer term levels in conjunction with the shorter term, etc. So there's different approaches and different strategies, and a lot of detail has been gone to. And you can basically watch over 30 hours, okay, if you choose to, and do a complete course, okay, on trading every aspect. You obviously also can join our live webinars. So they're 3 days a week. We also have a Telegram with live interactive trading feed. So you will get live alerts. So when a really key level, like the one I pointed out on that Aussie yen, for example, this evening, you'll get that sent out to you live. So you can then make your own decision and how you want to trade it, but at least it can alert you live, because often things like this might take days or weeks to appear. And when price is near it or at it, you can get an alert and have a look at it. We also have a webinar called The Inner Circle, and that's for our bespoke and active traders. So if there's any questions you've got at all, feel free to email nathan.bray there at acy.com. If there's any questions, register your live account. Your Next, I guess, step will be your account manager will set everything I've shown you tonight up on your MetaTrader 4 and then provide you access to learn it all. And then if you're using your demo account to learn it and get confident, you can do some trade reviews with your account manager or your trading mentor so that we can look at whether you're following the strategy or is there anything we need to tweak. Okay, so tonight we've sort of come to the end of this webinar. I do appreciate everybody attending. I'm getting some comments obviously coming through, but folks, it's been a pleasure. I look forward to working with many of you in the future. Go to acy.com and register your live account. And I look forward to working with yourselves or see you in some of our upcoming webinars. Thank you very much.